Our next guest is none other than tax attorney badass Jeffrey B. Kahn.
Here he is, Jeff Kahn. What's up, man?
Hey, Derek. Nice to see you again.
Yes, my friend. And I've been listening to your radio show as I normally do. Great stuff that you've been giving people on the radio show. You can check out the podcast, of course, contactslaw.com. Today, we're going to talk about some of the tax breaks that have been revived, if you will,
right.
Brought back from the ashes.
Exactly.
And this is good stuff. This is
It is.
applicable to a lot of people. The first one I want to talk about today is the deduction of state sales tax. Tell us about that one.
Yeah, actually, that one is a huge deduction, not so much for people who live in California, but there are 9 states which, don't have an income tax. And a lot of the states are small, New Hampshire, Tennessee, South Dakota, let me see if I can do them all, Wyoming, Nevada, Alaska. How many was that so far?
I think that was 5.
That was 5. So missing a couple others, but there are 2 big ones in that group, Texas and Florida. Now Texas, they're a Republican state, so you know who they're always voting for every presidential election. But Florida could swing, could go Democrat, could go Republican. When this provision was first enacted, you know who the president was?
Who?
Bush.
Interesting.
So basically, the Republicans said, hey, Florida voters, we're going to do a special favor for you guys because you don't have income taxes. Therefore, you don't enjoy a state income tax deduction like all the other states do. We're going to put this provision in that you'll be able to deduct your sales taxes. So that's huge. This is like a big politically motivated tax deduction, but it expired in 2014. And under this Tax Extenders Act that Congress passed just before last Christmas, they revived this for 2015 and extended it to 2016.
Which is huge because everything you buy that has sales tax associated with it, which is pretty much everything except for food, let's say, or a couple other things,
Right.
You get to take those as deductions in the states where it's applicable.
Correct. And the bottom line is you get to choose which deduction is higher. So let's say like you live in California, we pay a lot in state income tax. Probably your state income tax deduction will be higher than if you totaled up sales taxes. But maybe if you lived in another state where the state income tax rate was low, perhaps your sales tax will actually be higher and you could take that as a deduction.
Or maybe it just so happens you bought a couple cars that year or something like that.
That's right.
You and the wife both got new cars.
Mm-hmm.
Now you've got a really high sales tax number that you could use potentially against your state
That's
income
correct.
tax.
But you don't get both. It's one or
Right.
the other. Income tax or sales tax, not both.
Correct. There's so many to get. We're only going to get to the top 5
Okay.
today, but there's like 12 or 13 of these things, which we can find on the Tax Law blog, radio show blog, from January 8th, if you want to look them all up. The second one is the tax-free discharge of home mortgage debt, which has been a big one.
Yeah, that is a big one. And that came on, I think it was around 2009, and Congress periodically, they renewed it.
Yep.
Let it go, and unfortunately they let it expire in 2014. Well, under this act, they brought it back to life for 2015 and 2016. So if you have up to $2 million of debt on your principal residence and it now gets discharged, written off by the bank, you are not required to pick that up as income. You essentially get to exclude that cancellation of indebtedness as income. Now, it only applies to principal residences. So you have one principal residence, it will apply to that. But that second home, that vacation home, is the same unfortunate thing happens where, this debt gets written off, you have to pick that up as income.
Yeah, or investment properties as well.
Right.
Anything other than the home that you live in.
Correct.
Okay. Another one on here was the tax deduction for private mortgage insurance.
Yeah.
A lot of people didn't even know this existed.
That's right. When I was going to school and first learning tax, and this is going way back, I guess I'm dating myself now, going back to the 80s, okay? and you're learning all about tax, and they tell you, yeah, mortgage interest is deductible, but, mortgage insurance is not, okay? And now Congress, they've changed it.
Right.
And they said, we're going to give people this benefit. And it's kind of fair, too, because, you know, nowadays, especially with depending upon credit standards and stuff like that, and how much you put down on the property, if you have to pay extra for this, kind of makes sense that it's part of the cost of borrowing. And if you're going to allow deduction for mortgage interest, you might as well allow deduction
what's the
for this
difference?
too. Exactly.
Yeah, this is part of the same equation.
Exactly.
This is an enormous deduction for people because private mortgage insurance, as we discussed on the show before, many times, is a deal killer for so many people. I mean, $400, $500, $600, $700 a month sometimes people have to pay in private mortgage insurance.
That's right.
Because they're getting a low money down loan, a high loan to value, and if their credit isn't perfect, then you can pay the maximum premium. And it's an enormous amount of money. Now that they can finally deduct it, that at least ease the pain a little bit.
Exactly.
You know,
Exactly.
it doesn't eliminate it all, but it'll ease the pain
right.
a little bit. So that's a really, really good one. Another one on here was tax-free donations from your IRA.
Mm-hmm. And that's a huge one too, because think about it. You have a lot of money sitting in your IRA, and you want to do good for a charity. So let's say like you have $100,000, and you want to make a $100,000 charitable contribution. Well, if you pull out $100,000, put it in your account, so now you can write that check to the charity, well, you've made a taxable distribution to yourself. So now taxes will need to be paid out of that $100,000, which means you don't have $100,000 left over to the charity.
Right.
Maybe it's $80,000. So in that case there, you would have a $100,000 taxable distribution that you're going to pick up as income and an $80,000 charitable contribution deduction. So you don't get a wash.
Right.
You know, essentially, IRS is getting a piece of the pie for you wanting to be charitable.
Yeah, what's up with that, IRS?
Okay? So under the law now, what you can do is you bypass IRS, because now you can make that charitable contribution directly from your IRA to the charity. So now the charity's going to get, for example, my example, the full $100,000, and the IRS gets zero.
Nice.
I love that.
That never happens.
That is now.
Never, but until now.
Yeah.
So that's great, especially for people who do have a lot of money in their IRA, who clearly aren't going to need it all, and they want to do charitable things. To be able to make those
Right.
donations directly from the IRA, that would make them feel a lot more charitable, I imagine.
Yes.
Yeah.
You know,
Yes.
when you know the charity's going to get
Definitely.
100, you're not going to have to send a check to Uncle Sam.
That's right.
Another one on here, and the last one we'll cover, the rest you can find on contactslaw.com on the blog under the January 8th radio show, that you can buy computers tax-free with the 529 plan.
Yeah, yeah.
Interesting one.
Yeah, that's a provision that came about. It was like around 2009, and then it was out of the law, and Congress put it back in. And what this is with 529 plans, basically you could put away money for your child's college education, and that the child then could pull that money out tax-free, and the money grows tax-free. So ultimately, it's a great deal. It's a great way to shelter money from tax, let it grow, and it's now available for something good, a college education. But when the monies are pulled out, it has to be used for qualified expenses. So, you know, tuition, books. Well, now a computer and even internet access is included as a qualified expenditure from there. So now you have a child who's a beneficiary of a 529 plan. They're in college, they need to get a new laptop, or the college requires that you need to have a laptop. They can pull the money out of that 529 plan, use it to pay for that laptop or that computer, whatever it is, and it's not taxable.
Wow, that's awesome. That's
Yeah.
huge because
Yeah, that's
computers,
really cool.
computers are only good for like a year or two, especially if you're in college. I mean, the abuse that
Yeah.
computers are going to go through in that situation, walking to class, throwing it around, all that stuff, that's a big one. So here's something that I know we all want to know that I didn't tell Jeff we're going to talk about today, but
Okay.
there's a huge
Surprise.
Powerball drawing. I've got 20 tickets, Jeff.
Coded dollars.
Makes me what? One in 12 million or something chance to win. So
But there's still a chance.
there's a chance. Jeff, I just want you to know, if you get a phone call from me Thursday morning,
Yes.
early, you know I wouldn't normally call you this early in the morning on a Thursday. Please pick up the phone. You're the person I'm calling if I win the Powerball.
I will.
Now, no matter how much, even if I just get 5 of the numbers and don't get the Powerball or whatever, win $6 million bucks. Oh, it'd be.
Yes,
if any of that
please.
happens, I'm calling you first.
Okay.
Do you,
That's a very good deal. You should be doing that.
right?
Yeah.
And you should be that guy. I think we should make you that guy. Anyone out there wins the Powerball or wins any portion of the lottery, you got to call an attorney first. Who better to call than a tax attorney, especially a tax attorney badass from Smarter San Diego, Jeffrey B. Kahn. Can you think of anyone better, Rebecca?
Nope.
It's just
I
that
think
simple.
That's it. That's
Jeff,
it.
great stuff. Thank you for your time.
All right,
I
Jeff.
hope I get the opportunity to call you Thursday morning. Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else commercial free.